Good morning, good afternoon, and good evening to all of you following us today for this plenary. Our apologies if we have a slight technical issue with some of the panelists that are going to join us. The panel is more gender balanced than it is right now. It's very gender balanced because our male colleagues are some are coming in, so we have one missing. And this will be the panelists for today. In the meantime, ladies and gentlemen, I wanted to introduce myself. It is my pleasure to honor to moderate this panel. Pedro Vasconcelos, I'm the manager of the financing facility for remittances here at the International Fund for Agricultural Development. And on this panel today on remittances, digital and financial inclusion,
brother, I need you.
We are going to try to advance several discussions that have been going on in this thematic for the last 20 years. Indeed, a lot has changed over the last 20 years in remittances. When actually I remember starting on this, technology has allowed us to innovate and make quantum leaps in accessing information, services, and better ways to link these to our specific needs. However, some of the things have not changed that much. Some good, some bad. On the good side is the determination of migrants remains stronger than ever in supporting their families. That has not changed. On the flip side, while costs have come down, they remain high, and particularly in certain areas of the world. So this is also something. And most importantly, I think, is the vision of what these flows mean for some remains unchanged. The potential that these have for financial inclusion remains, there's still a lot of skepticism around that. The equation is very simple, as you will hear from our panelists today, but it's still at every level of the ecosystem, from governments to service providers, there's still a lot that we can do. And we hope this panel will try to do that. And we will go through some round of questions with experts that I have the honor to moderate today. We're going to have an introduction from Dr. Joe Puri. She's the Associate Vice President of Strategy and Knowledge Department of IFAD. We're going to have Karafa Jobarti. He's the Deputy Director for Financial Markets and Reserve Management Department, Remittances, focal person of the Central Bank of the Gambia. We're going to have Antonia Esser. She's the Engagement Manager at Semfri. And as well, Nika Nagavi. She's the Director of Strategic Projects at MFS Africa. And last but not least, Andy Jurid. He's the Chief Executive Officer at Mukuru. So it's a pleasure to have this level of quality in this panel to engage in this follow-up discussion to previous one, and we're going to try to make everyone catch up on this. But without further ado, since we only have 1 hour, I would like to introduce you to Joe Puri, the Associate Vice President of what we call SKD at IFAD, to deliver her remarks that will help us contextualize and bring everybody up to speed as we engage into this panel. So without further ado, Joe, I would like to give you the floor.
Thank you so much, Pedro. Excellencies, distinguished representatives, ladies and gentlemen, a very good afternoon to you and to everyone who are gathered here today for this session of the Financial Inclusion Week. A United Nations resolution declared every 16th of June as the International Day of Family Remittances. And we're here today to fully recognize that 1 billion people are involved today in either sending or receiving remittances. In this context, this year, IFAD launched a global campaign to support the recovery and resilience of people through digital and financial inclusion, so that they could send remittances home to their 800 million family members. So 200 million people sending remittances home to their 800 million family members in low and middle income countries. Last June, at IFAD's Global Forum on Remittances, Investment and Development Summit, we addressed the priorities for the sector and brought together stakeholders from the public and private sector to support the development impact of what is effectively the single largest financial flow to developing countries today. Indeed, in 2020, the total volume of migrant remittances sent to low and middle income countries amounted to $540 billion, surpassing ODA, official development assistance, and FDI, foreign direct investment, to developing countries combined. Behind these numbers lay millions of untold stories of families that are supported as a consequence of remittances. 2 billion individual transactions of approximately $200 a time. These are destined for parents, for siblings, for children, for other loved ones back home, and typically represent about 60% of household incomes. The main purpose of these flows is to help fight poverty and improve access to nutrition, health, education, housing, water and sanitation, or as we say in IFAD, contributing to a recipient family's own SDGs. These steady flows also promote financial inclusion of households. The productive uses of these funds positively impact and affect local communities through savings, investments, and job creation. I want to give 3 quick messages today. Remittances can be a source of resilience, first. Second, digital technologies represent a low-hanging fruit. Third, who and where we invest on with respect to remittances is clearly important. So let me do this very quickly by turn. First, remittances can be a source of resilience. Recent events showcased once more the importance of remittances as millions of remittance recipient families were able to ride out the economic shocks of the largest health crisis in modern history. We've learned that for millions of these remittance families and the communities that they live in, this crisis was not just averted in 2020, it was confronted. The robust resilience, resourcefulness, and commitment of migrant workers has enabled them to redouble their efforts to support loved ones back home while struggling in the face of the enormous challenges posed by the pandemic. To maintain monthly financial lifelines, migrants undertook many sacrifices, working far greater jobs than they used to on average, depleting savings, and adopting digital means of sending money home when available. So strong is the social contract between migrants and their loved ones home that millions of families received their first remittance ever during the pandemic. In the final analysis, while other major financial flows declined sharply during the pandemic, global remittance volumes remained essentially unchanged from the previous year, with a marginal decrease of 1.6% in total flows. So that's the first message. It can help to increase resilience. The second message is digital technologies represent a low-hanging fruit in this space. The panel will address this question, but the adoption of digital technology is a major factor in supporting the ongoing flow of remittances. The uptake of both online and mobile channels presents the private sector with an unprecedented opportunity to develop innovative digital tools and services that can help to foster financial inclusion for migrants and remittance receiving families. Remittance transfers, ladies and gentlemen, are still quite expensive. The average cost of remittance transfer for every $200 in developing countries is 7%. This needs to change. We have the technology, we have the platforms. A 1% reduction in the cost of transferring remittances will also lead to an increase in remittances by 1.6%. Clearly, this is something that we need to look at. And digitalization needs to be supported even more actively. That was the second message. Third, who and where we invest on is clearly important. It's particularly an opportunity to promote the financial participation amongst recipient families and particularly amongst women, who are today 33% less likely than men to have a mobile money account. At IFAD, we recognize that almost half of the family receiving remittances live in rural areas in developing countries. So remittances in these rural areas can count the most because they have the greatest impact. But Achieving their full potential will also require the expansion of the use of mobile accounts and leveraging these resources to delivering improved livelihoods and stronger resilience. This requires, in turn, closing the territorial as well as gender gaps by addressing barriers that prevent rural people, especially women, from accessing and using mobile financial services to invest and grow their income. Ladies and gentlemen, 15 years ago, remittances were literally unaccounted for because migrant workers and their families did not count. The pandemic demonstrated once more the many ways that migrant remittances, individually in modest amounts, can, in the aggregate, have a large impact on entire communities. This is a critical reminder for all nations to make remittances count more. At IFAD, we are working very hard with our key partners to do just that, and today's panel will be a further step in understanding practices, business models, and public strategies to make remittances in the near future count even more. Remittances have the potential to be a powerful conduit for financial access, and by maximizing their impact at the receiving end and by creating the conditions to foster remittances and remittance investments in rural areas, we can support the creation of business and generate employment opportunities. At IFAD, through previous and ongoing projects and advocacy programs, and our partners from the European Commission, Luxembourg, Spain, and Sweden, we have contributed to several key areas. These include enhancing the enabling environment for remittance transfers in numerous countries and promoting private sector innovations that today are benefiting remittance senders and recipients. As a result of these, we are expecting that our engagement in Africa, for example, will support millions of families and at least 1.2 million people in 3 countries of West Africa alone. With better access to remittances and adequate financial education, families in rural areas will have more options and resources to also invest in small businesses and farms, leading to increased incomes. Ladies and gentlemen, to conclude, at IFAD, we believe that given better opportunities to save, remittance families will save more. Given appropriate investment options, remittance families will invest more. And given better mechanisms to invest in human capital, remittance families will live better lives. And we know we can do this, one remittance family at a time. Thank you. Over to you, Pedro.
Thank you so much, Suri, for this. I think it contextualized pretty well the situation that we are, the reality check that we faced during for the last 2 years. Once again, the demonstration from so many to all of us of this reality. And we have indeed, as you mentioned, an opportunity today. And digitalization can help us in this goal of financial inclusion as we are addressing. So the panel today will help us in this. We have prepared 2 rounds of questions. One that is more of a stock taking, and I will take that opportunity for each one and every one of you to introduce yourselves, to give your institutional position in this field and provide some insights of the current state of play and priorities for digital and financial inclusion linked to remittances. And we will have 3 minutes for this. For the second round of questions, we're going to try to get more into recommendations, hints, and advice that you might have from your respective sector. And before I give the floor to Karafa Jabarti from the Central Bank of the Gambia, I would like to say that we do have a good representation of what we think the ecosystem looks like, and everyone has a key role to play. There's no panacea about the private sector leading this part alone. We need cohesion with the policies that governments are putting to place, like financial inclusion. We need the innovation from the private sector. We need the ideas and, of course, recommendations from a lot of international organizations, think tanks working on this, showing us the way where opportunities lay. So that's what we're going to try. And so without further ado, I would like to give for this first round the floor to you, Karaf. If you can, in 3 minutes, let us know what are the main strategies that are in place by the authorities in Gambia to enhance this financial inclusion vis-a-vis the increasing diaspora Gambians and the remittances back home. If you I don't see your video, but I just want to make sure that to hear Carafa. We might have run into a technical problem here, and if we did, then while we fix this, let me then go to our next panelist while we try to get Mr. Jaberti on the line. So I would like to go to you, Antonia. You are an expert, of course, in this field. Senfri has been looking at a lot about this from the digitalization. So after introducing briefly Senfri, because many of us might not know your organization, but what have been the challenges related to digitizing remittances in Africa, particularly for these companies who aren't set up to be digital providers and are still players relevant in a provider landscape that is, as you know, rapidly moving towards digital-only solutions. So what are the ramifications for the ecosystem in that regard?
Thank you, Pedro. Thank you, Dr. Joe, for introducing the session in such a powerful way. My name is Antonia Esser. I'm very honored to be invited to the session and to be sharing the floor with these fellow panelists who are very much on the ground with the migrants as well as their recipient families in Africa in particular. I represent Senfri. We are a not-for-profit consultancy firm basically focused on financial sector development and digital transformation more recently in developing and emerging markets. Our main focus at the moment is on Africa, but we do work beyond Africa. We are based in Cape Town in South Africa. And we have been involved in the remittances space for the past 10 years or so. As it grows in importance, we know how strong of a conduit it is as a first interaction for many people with the formal financial sector, and the ability for remittances to be used then to offer additional value-added services such as insurance, for example, which is something that we are working on with several providers. We're also currently advising governments across many African countries on their transformation strategies and how to enable the flow of remittances better, and offering technical assistance to private sector players. So with IFAD, for example, we are currently working with 14 remittance service providers across 7 African countries to help them with their particular customer due diligence processes. How can we assist those remittance service providers in enabling remittance recipients to receive their remittances digitally by also enabling remote onboarding? So, for example, just using a phone to sign up without ever having to set foot in a branch. So at Senfri, like I said, we have been active in this space, and at the start of the pandemic, we tried, just like many others, to calculate what would be the effect of the pandemic, and there were many fears around how resilient this flow could be, and we were really blown away by the change in behavior we saw by remittance service providers who were very fast in adapting their products and services, particularly from a sending side, as well as consumers who now took the leap of faith and said, we are going to try digital means for the first time. So in that space, in the last 20 months, the types of transformations we have seen, we would have not dreamed about 5 years ago, and we've been actively pushing for a lot of these reforms that have been accelerated through the crises. So it is it was a very, or it still is a very awful crisis and pandemic, but it has shown that it has the ability that we can use this momentum now where people are more open to using digital means, that we should build responsible and inclusive products. And I think, Pedro, you asked me what financial service providers have struggled with in digitizing. And I think, an ecosystem is only as good, or the technology is only as good as an ecosystem. So any digital means run on basic infrastructure such as electricity, such as network penetration, And if these are not robust, then people will not be able to receive their money. So the more basic structural barriers that we've seen in financial service provision are essentially still remain kind of main challenges for digital providers as well as kind of analog or traditional financial service providers. The supporting infrastructure, regulation, enabling things like remote onboarding. Many governments were quick to put guidance out to say, please use digital means of verifying a person's identity. And that is a very important step that we would like to see more of, particularly also from the Financial Action Task Force, who released guidance around that. So governments have been using that as their push to release guidance around it themselves. But now what we are seeing on the ground is many providers could accept digital identity, for example, but have no means of verifying such an identity. So really, it's about ensuring that it feeds through the entire value chain, that it doesn't remain on guidance, but really technical assistance to help providers overcome these really structural barriers that take a lot of capacity to overcome, that take a lot of infrastructure developments or infrastructure investments rather to overcome. And the fact remains that if you receive a digital value today, even in your mobile wallet, you cannot spend it as easily as you can spend cash. People need to be able to access cash. You can't pay with a mobile wallet in every shop across Africa, particularly not if you're a vulnerable recipient, if you're in a very remote area. So the financial access points to exchange digital value for cash are very important. And what we can't forget is that if we only focus on digitalization, those financial access points are going to be receiving less attention. And therefore, there is a big risk that we actually increase the digital divide if we don't focus on inclusive products, but also on an inclusive ecosystem. So let me stop there for now.
You already actually answered my second question already. So this is why I allowed you more than the extra time, because there was my second question was about that. If you can tell us about the risks around focusing on the digitalization. So thank you already for answering that. I will still give you time for the second round, but we're kind of catch up. I think we had an issue with Mr. Carafa, but he came back, but we still have it. So if it's okay, we are going to continue with the panelists. With this introduction as well from Antonia, I would like to go with the service providers. Two different types, aggregators and specific service providers. And of course, after presenting the institution, please in 1 minute, and then if you can in 2 minutes, give us really the insights that for us to understand better, in this case, Nika, how MFS is supporting a better financial inclusion of the remittance users. It's a very simple question, but there's a business behind it. Is it viable? I mean, now we're dealing with private sector now, institutions in here, and that's the rule number one. So is this viable? Is this a logical continuation of the companies, of the institution to go in that direction? So Nika, you have 3 minutes. At 2:59, I will cut you. I will remind you. There you go.
Okay, no worries. Thank you, Pedro. And this is Nika Nagavi, Director for Strategic Projects at MFS Africa. In my role, I identify and execute strategic initiatives that are aiming at sustaining and accelerating growth and entrenching MFS Africa as a key player in the payments ecosystem. So let me start by telling the audience a bit about ourselves. For those of you who don't know us well, we are a Pan-African fintech company. We operate the largest digital payments gateway on the continent. And for a company like us, with a deep sense of purpose and cutting-edge technology, financial inclusion, economic empowerment, and prosperity of all Africans has always been and will continue to be the most potent force and driver. We believe that in a world that fragmentation is holding us back, building a network of networks that provides convergence and interoperability at scale would really mobilize borderless possibilities. And it's not news for any of us on the panel, and Antonio and also Joe spoke about it, that mobile money industry has played a very instrumental role in driving financial inclusion across Africa. And at MFS Africa, we've been driving the next steps of this revolution. Since 2010, when we started, we've played a key role as an ecosystem enabler and orchestrator across the continent. We built a network of networks that connects over 320 million mobile money wallets across 37 African markets. And in doing so, we've enabled millions of Africans to exchange value and transact with anyone else in Africa and across the world. Today, through our single API connection, businesses and consumers can send money or get paid in every corner of the Africa. And we couldn't have done this alone. So we rely on a diverse set of partners, including both globally and Africa, including MNOs, banks, MTOs, gig economy giants, unicorns. And through these partnerships, we create end-to-end digital channels. And for instance, these end-to-end digital channels connect the global diaspora to their families back home, or enable the like of like Spotify or Glovo to connect payments from African consumers. So to your question of whether this is a viable business or not, we wouldn't have survived for more than a decade if it wasn't. And I think there is value for everyone, a role for everyone to play in the value chain. MTOs can't really scale as much, for instance, when we're looking at remittances, if they start integrating bilaterally and one by one to all these countries and different payment options, etc. And it would be the same for mobile network operators and banks. So there is a role to play for everyone, and it's a commercially viable business. And also when it comes to COVID, and I think you've covered a lot of like COVID-related trends so far, the worry that the industry had at the end of 2020 was that this uptake and shift to digitization is not something that is sustainable, and people will revert back to cash when borders are opening, when a huge population on the north side are getting vaccinated, and we haven't seen any of that. And I think this was a big win for everyone in the industry. I want to basically end my points, and I'm conscious that you're going to cut me anytime soon, is that building an infrastructure like MFS Africa is not an easy task and hasn't been easy for us. The journey was very long, complex, but from here onwards, opportunities are endless and the benefits can really compound for a long time. We know Africa is the youngest continent. Over the course of the next decade, we expect mobile internet usage, smartphone adoption to increase significantly across the continent. And because of that, there will be millions of entrepreneurs, businesses, and consumers to empower and enable. And at MFS Africa, we'll continue to remove frictions, to simplify payments across a host of essential daily use cases in order to meet this demand from these millions of entrepreneurs and businesses that are going to be digital first. But to the point that that Antonio mentioned around the ecosystem, cash is still king. So there is a lot of work that all of us have to collectively and cooperatively do together to make sure that the ecosystem has all of the options. Digital only is not the only answer as well. You need to provide options to consumers, whether they want to convert the digital to cash, whether they want to pay in a shop or etc. And we're not there yet in terms of options to consumers. And our ultimate goal at MFS Africa is to enable access to a world of borderless transactions and possibilities, because we believe that access is the only currency that matters. Thank you.
Thank you, Nika, on that. You actually also already answered one question that I had for you for later. So at least you you have a feeling that we were able to convey that. And yes, cash is king, but I think I invented a new expression after this is, but options are queen, and options are better than just one cash. So absolutely. I think, Carafa, do you hear us? We do see you. Just want to make sure that if you can unmute yourself just to test, and if you can.
I can hear you, Pedro. I can hear you now.
Okay. Well, I'm glad we were able to solve this technical glitch. We were supposed to start. The logic was with the public sector, a think tank, and the remittances, private sector entities. The idea here, and just repeating my question to you from the beginning, if in 3 minutes, just letting us know from the Central Bank of Gambia, of course, but what are the main strategies that have been put in place by authorities in the Gambia to enhance financial inclusion targets vis-a-vis increasing diaspora Gambians and their remittances back home? If you can give us an insight on that. I know that we could speak all day on this, but what do you think the audience should know about the linkages from this reality, a very big reality for the Gambia, and your financial inclusion strategy? You have the floor.
Thank you so much, Pedro. The Central Bank of the Gambia continues to be the only regulatory body of the financial sector. And we are pretty much glad that with the level of remittances we have seen over 2019, 2020, despite the pandemic, it has been a robust improvement in the remittance data of the Gambia. And this has partly enhanced our financial inclusion methodologies and strategies. We have been able to put in measures and mechanisms to ensure that these remittance flows reach the beneficiaries using both digital financing and the conventional methodologies which have been in place over a period of time. One of the significant issues which the central bank put in place has been the issue of encouraging agent banking between for our commercial banks, which are about 12, to expand their operations very closer to the population. I mean, we have a very huge unbanked population, but with this agent banking, we have seen our services being extended to most of those avenues or areas which have been unbanked for a protracted period of time. And this has enhanced a significant level of financial inclusion over the past years or so. And the Central Bank of the Gambia, in association with UNCDF, has also been on programs to try to enhance the financial inclusion strategies and policies of the Gambia. And it also includes the use of the mobile banking or the mobile payouts, which we have seen it has been increasing in the most recent, even though we have only 2 which have been specializing in local mobile money transfers. But in the most recent, the Central Bank of the Gambia has approved between one of the mobile money companies to partner with an international money transfer company called RIA to be able to terminate remittances through mobile wallets. We also have the interlinkage models, which is the enhancement of the financial and business cooperation between commercial banks, the microfinance institutions, the credit unions, and village banks. Then among the strategies, we also have the client empowerment model, where more people are brought into the formal system through connectivity. And the system through coordinated national financial literacy initiatives, which is complemented by consumer protection programs and policies. And in this case, we have seen access to finance and financial services have improved significantly over the past 3 years. This, we believe, will continue to enhance the financial inclusion strategy and policies of the Gambia. Thank you.
Thank you so much for this. You were over for 1 minute, 2 seconds. So I'm impressed. Thank you so much. That was straight to the point.
Thank you, Pedro.
And we're delighted to also be working with you, as you know, on the Prime. I think the Gambia represents a key opportunity to advance this thematic the complexities about linking remittances, financial inclusions, digitalization. I have a question that while you all addressing your points, if you could answer, is if you think I'm right in stating that remittances can really spearhead digital and financial inclusion. So when you're intervening, tell me if you agree with that or not. That would be extremely interesting. Without wasting more time on my side, I would like to go for the last of the panelists for this first round. Andy Jury is the Chief Executive Officer of Mukuru. Mukuru has the best logo ever in the industry. I love their logo. I need to say it. It's very, that's it. I'll just say it, Andy. But this is what actually a customer might understand about an aggregator, because it's this different services beyond the send money. There's other things, and Mukuru has been having a strategy on that. So we wanted to discuss today with Andy to of course to let us know a little bit more about Mukuru, but also how have you seen it? How have you seen the ecosystem evolve, particularly in terms of digitalization, and what are your your thoughts on the trends to come? That would be the first question. The second one will be to get more advice from you. But first, we'd like to hear from your institution and your main thoughts about the current state of play. Andy,
thanks, Pedro. Lovely to be with you today. I had nothing to do with the logo, so that's probably why you like it so much. Afternoon, everybody. Lovely to be with you. Mukuru is a next generation financial services platform for Africa's emerging consumers. So it's really about the provision of mobile-led digital financial services for the bottom end of the pyramid. We are very fortunate that we face a large and relatively unsaturated addressable market. Our estimation is that 90% of financial flows, and certainly customers in terms of the number and the way in which they transact, happen on the African continent in an informal, over-the-counter, cash-to-cash manner. And there's limited infrastructure that serves their needs. And so this sort of very obvious suboptimal equilibrium tends to perpetuate. And so what we've done over the course of the last decade and a half is build an omni-channel payments and distribution infrastructure that we believe really serves the needs of our target customer audience. And so it's fundamentally about bridging that cash and digital divide. I think Antonio made the point that if you want to be big in digital, you need to have ramps that allow your product to be accessible to where customers are today. And so those on and off ramps to cash have been critical to the evolution and digitization that we've seen in our customers' lives over time. It's to the point where 80% of transactions today that flow through our ecosystem are triggered by customers using their mobile phones, but there's still a very long way to go in driving that. And we've actually found that the more we invest in our physical payments and distribution infrastructure, the degree of trust in our digital ecosystems. So there continues to be a really interesting harmony between those. We've positioned ourselves at the intersection of this formal and informal financial ecosystem Venn diagram. And so most of our customers come to us having never touched a digital financial instrument and definitely don't have any access to a bank account. And so what we pride ourselves on is having a capability that, as long as they have some means of formally identifying who they are and access to a mobile phone, we can take them on a journey towards greater degrees of formal financial inclusion and digitization. So we will meet a customer where they're at and try and address their need and want. Most of our customers' initial sort of burning platform is to send money home to their loved ones, either domestically or cross-border. But whether it's to address that need, whether it's to facilitate a broader payment use case, anything that requires the cash and digital divide to be bridged is really within our wheelhouse. Whether you want to send food products home, as was something that gained popularity during the pandemic, whether you need a digital store of value or access to other derived financial services like insurance, savings and loans, etc. We believe we built the capability to serve customers and create a platform that enables this bridging of the cash and digital divide. We've served 9 million customers in the last decade and a half. 5 million of those, or just under 5 million, have used our services in the last 12 months. And increasingly, we are seeing that whilst customers still come to us from a sort of offline cash-to-cash physical engagement perspective, we're able to drive that step towards a degree of digitization far quicker. We don't see this digitization journey as a binary switch. Rather, it's a series of interconnected links in a value chain. And as long as you can make those changes small enough, but continuous and incremental, you can create an environment in which people still recognize the ecosystem they're transacting in, and that change becomes sustainable over time. So it's a fantastic part of the ecosystem to be involved in. It's one where there is, really untapped opportunity that is limited only by your imagination. And at the same time, we believe that we are enabling our customers to gain control of their own financial lives and leverage off the benefit of having a digital financial identity that builds momentum over time.
Thank you, Andy, for that. Straight to the point. I love to hear your enthusiasm. I mean, service providers in this in enthusiasm that is very promising, and I think it gives the state of the market. So it's very nice to hear. Thank you all for your introductions, to have your first view. Again, we all know it's just 1 hour, but I would like to go to a round 2. We have a little bit less time, so I thought that it would be great is to convey to the audience that might not be acquainted too much about that. What are the main recommendations? We know that this is following up several other ongoing discussions on this. But I would like to ask each of you, some specifics that can give us a hint on this, on your views. And I would like to go back to Antonia to keep to keep the same order from the beginning. Antonia, could you tell us the 3 things you would advise, regulators, policymakers, the private sector, and the development community, since we're at it, from your standpoint, that we should focus in order to use the pandemic momentum to bring lasting and inclusive change to the industry of remittances in the continent? What would be, if you only have two, but 3 sounds better. What are the 3 things that you think?
Pedro, I'm going to go out there. I'm going to give you 4. How about that? To contravene the rules. But I think reflecting on the work that we're doing and the evidence that we're seeing. So again, on the digital flows, in aggregate, they look huge, but we don't know whether vulnerable people have been able to access or use the digital means as much as, the more affluent, let's say, population segments. So we definitely need more data. That isn't necessarily one. I consider that as an underlying factor anyway, that we always need more data. But the top 3 or 4 things, I would say, definitely digital identity. There is so much convergence between financial services such as remittances and the ability to prove who you are and that you are in a online space or a mobile space. So we need digital identity, including the rules and the standards around it from a regulatory perspective, from a provider perspective. What we also need is easier access to foreign currencies. In Africa, we don't have a foreign exchange hub. We rely on correspondent banking relationships that are more and more harder to establish or maintain. So we need alternative ways to access foreign currencies, also through the exploration of things like central bank digital currencies, cross-border, but again, foreign exchange hubs, reduce the reliance on correspondent banking relationship. And just to connect to my previous point, again, this kind of needs-based expansion of financial access points while we navigate the digital journey. So people, in order to build more trust in the digital and formal system, need to be able to seamlessly exchange cash for digital and back. We need to enable that, like we heard from Nika as well, from Andy, options. We need anyone to use what they feel most comfortable with, and only when they see more convenience from using a digital channel over a cash channel will they make the switch that is more lasting. So these 3, the 4th one that I really want to highlight is the adequate financial consumer protection. We are seeing cybercrime on the rise. We don't have proper consumer recourse mechanisms. When your money goes away in the virtual space, what do you do? Where do you go? These are very real problems for people. They need quick assistance, and it needs to be a way for them to escalate in order to make the system inclusive. And basically, just to highlight what foreign exchange hubs are, again, it's a marketplace where you can trade illiquid and volatile currencies and don't always have to go through a dollar or a euro, that are more widely traded. We need the ability to trade these currencies one for one with one another, especially in Africa, where there's a lot of intra-Africa trade, without the need of having to go through a US-based system or a euro system. So let me stop there. Thank you, Pedro.
Thank you, and thank you already for taking the time on the questions and answer by answering directly the question in the chat. That's pretty good. Thank you, Nika. I would like to ask you. You started in your presentation, talking about the key challenges of the service provider and international money transfer during the pandemic. Can you expand a little bit just on that, and if you've seen any difference between the sending and the receiving market? So more based on the market trends and what you see. And the recommendations in that.
Perfect. I think I covered parts of this in my first response. So we haven't seen, there was a lot of skepticism at the end of 2020 that the flows won't be kept up, but we haven't seen any of that. What we've seen is a bit of lack of regulatory capacity to respond to a lot of new licenses and a lot of new players being added to the space, whether it's on the receiving or sending side. So that's something that we would like to, that's a key thing, because sometimes we're waiting for months over these licensings. And sometimes there are players or MTOs who are licensed entities to send to a market via us. If they're switching from one aggregator to another one, they have to go through the regulatory approval processes. So these things are the main barriers that we see, but in terms of demand and supply, we haven't seen anything to the contrary of things slowing down. Actually, the demand has been there in terms of remittances, people sending more digital remittances and supporting their families back home.
Thank you. Thank you so much for that. If there's a questions in the chat for Carafa on that, I'm afraid of opening the Pandora box because actually we're going to organize an event just on that. But there's a question, so I would like us to maybe just address it in regards to the cryptocurrencies. And basically, what do you think are, of course, the role of cryptocurrencies in the current and future market of remittances market? But before, Carafa, if you can just give really very shortly your point on that, to be continued, and we will continue. There's a question on terms of advice on the sending side. What can be the issues that affect the Gambian market on remittances and its correlation with financial inclusion? That could be one point that would be interesting to elaborate. And of course, also if the Gambia financial sector is deep enough to enhance this financial inclusion with remittances, given what we have heard from some of the service providers. Would you like to comment on this briefly, Carafa? I think we lost you. Something is muted. Oops.
Yes. So sorry, something is muted. Can you hear me now?
Yes, please go ahead.
Yes, as I was saying, the Gambia's financial market is not that robust enough at the moment, but we are gradually improving to that level. And as a result, what we are seeing in terms of the remittance market through the financial system, it is gradually largely coming in the form of cash and cash pickups. We are not using, the market is not deep enough, as I said, in terms of the digital system. What we have right now is only 2 mobile companies, but we have a lot of cash pickups in about 12 commercial banks with 6 microfinance institutions and about 138 foreign exchange bureaus. These are all agents of international money transfer companies who are, definitely striving hard in terms of flows coming to the Gambia. And as I said earlier on, in 2019, we had about $329 million And 2020, we have about, which represented in 2019, about 17% of our GDP. And in 2020, we had about 589 million US dollars, representing about 48% of our GDP. You see, the significance of remittances in our macroeconomic management cannot be overstated. But to enhance it further, we believe that we need to develop our digital financial landscape, which we are working very hard to do, but we still have constraints, and I could categorize these constraints on the three. We have the regulatory, the demand side, and the supply side. And more importantly, on the demand side, you have to talk about what my earlier colleague says in the presentation, is the level of interoperability between the operators of the digital system. This is a challenge. We also have the problem of consumer protection framework. In the Gambia, we do not have a commercial court at the moment which can deal with financial market regulation issues. So we have those type of challenges in our system. But we believe with the level of cooperation and development which is going on at the central bank level, the financial market is on the path to a robust development.
Thank you. Thank you so much for that. In 1 minute, can you brief the audience on your position for the cryptocurrencies? Is there a trend that you see in terms of feasibility? There's a big hype about that. We know a lot of the restrictions that exist. We know that the future is going, but what is your views?
In the Gambia, we are not hyped with cryptocurrencies thus far because we don't think the regulatory environment exists yet. And you wouldn't want to come into a practice when there is no regulation in place to deal with it. So as a result, I mean, we are not foreseeing cryptocurrencies in our environment in the next year or so. But because the regulatory framework will have to be in place first.
Thank you very much. There was a meaning for this question, and it goes back to what Antonia said about digitalization. There's a lot of hypes. Innovation comes like that with ideas that are supported, but until these are applied effectively, either by the regulators or either applied by the private sector, it still remains an idea, and we need to take into consideration other things. Access to electricity being one, for instance, as Antonia said, and for IFA, the rural access is key. So having those issues is extremely important and need to be addressed and not forgotten, which we often see the point. So in this regard, I would like the last question of this round / questions, because we only have 8 minutes, but you already answered some of the questions that were in the chat. Andy, I wanted to ask you, the title of this panel is Remittances Towards Digital and Financial Inclusion. Can you highlight from your standpoint the connections that remittances and other financial products and services are playing in driving this permanent, and fundamental changes to the digitalization and financial inclusion landscape? Because I think this is what we'd like to get, and you guys are applying it. And if you're doing, that means we're going somewhere. So could you give us an insight on that?
Wholeheartedly. We see remittances as a sort of lifeblood that enables you to identify flows, and often those flows into domestic environments are then the triggers that enable I suppose transactions to happen that facilitate consumption. So to the point that Antonia made, the key sort of unlock for us has been building a network that services both senders and recipients of remittances flows, and by injecting ourselves in in a core part of their financial flow ecosystem, you know that you are participating in a transaction where a sender, by definition, has the wherewithal to pay for a transaction, and the recipient is using that inbound remittance as a funding mechanism, or a regular salary. And so we've looked to build products and services that are tangential to these flows, but address the needs and wants of our customers on both ends of the spectrum. And so, to Antonia's point, you can only really drive true digitalization if you can find digital hooks through which people can transact in their domestic environments. And so by ensuring that you can build the sort of transacting ecosystem that allows a recipient of an inbound remittance to then send that money domestically, pay for goods in that environment, use that to pay for trade cross-border. And it's amazing if you can provide the platform enable the access, ensure that you can educate customers so they can get over those trust hurdles, then the ingenuity of the human spirit just means that the application of the system is limitless. And so we are trying to ensure that we can do our bit to, our core philosophy is to put our customers in control of their financial lives, and give them the wherewithal to ensure that they can, apply that appropriately. It's been amazing to see the sort of a spinning of the flywheel accelerate exponentially as the network effects happen. But it certainly doesn't happen overnight, and it's not one of those things where you just have a panacea that arrives one morning.
Great. No, thank you. I think the questions in the chat were about that. Are there concrete examples? Nika, would you like to share some if you can also? I think this is why we want. These are not pie in the skies. This is happening. This works. Can you give in 1 minute some of your key examples in that?
Examples of like linking remittances to more adjacent services. Okay, that's a good one, because I think we've heard from everyone that remittances are a lifeline, but we don't see any mechanisms for safeguarding those flows. That opportunity is very unexplored. So we recently have done a year ago, I've done a pilot in Rwanda in partnership with Inclusivity Solutions and MTN Rwanda. And we piloted a loyalty-based insurance product, which covers loss of income and additional kind of non-medical expenses that consumers normally incur when they're hospitalized. And the main key value proposition is that you can send money to your loved ones to qualify for free insurance in the event that you're unexpectedly hospitalized. The product is called Hospital Cash. What we saw was that the uptake was great, and it was 200% more than the target that we have. But one of the interesting outcomes of this pilot was that we saw that people who were who were qualified for hospital cash, but they were sending significantly more remittances. And this really speaks to the fact that there is a potential of a product like this to direct a considerable share of remittances that are informal and cash-based, but also we need to really think about the migrants, diaspora, or senders' duty of care, and making sure that the safeguards are there to increase the resilience of these flows. I think my 1 minute is up, no?
Thank you so much for that. There is indeed a lot of examples. We have 3 minutes. I'm just checking if there's another question. I just wanted then to try to summarize in 2 minutes. So maybe if you allow me on that. There is we all wrote a book on this, by the way, and it will be, if you call in the next 5 minutes, it will be free for you for $9.99. No, this is just the first of this not the first. It's actually the second or third in the series that we have. And many of the members here have been part of the remittances community task force that helped identify the issues during the pandemic. I'm very happy to say that last weekend during the G20, the report was released to the heads of the G20, particularly for them to see on the sending side what could be done. But there's a very good insight on the impact of the crisis and recommendations. Many of them have been applied, and I think have been very successful. And this is the proof how the community, public, private, and civil society can work together really in times of crisis to bring it up. And we will share this also with the audience. In the meantime, as I said, this panel is follow-up to the Global Forum on Remittances, Investment and Development that we are also releasing today. And there's been a lot of questions about examples. I would recommend many of the viewers right now to link, if we can show the link on our screens. The idea here is, or if you cannot see it right now, you can go to ifa.org or remittances or gfrid.org and download the report. This will give you a good insight on what led to the discussion today, but also some more insights. This has been a 2.5-day event in this regard. I think it would be great. I would like you to take the last minutes really not only to thank the panelists for this, and I hope that we have opened the appetite for the audience for more. There will be more, but here I think what I retain is really the need for cohesion from policies, This is what from our colleague Carafa. That's why I understood it is there. There's a lot of things that need to be done, of course, other type of reality, not just go to the hype of the moment on one technology and another. This can help, but we need to be pragmatic also in how the way we look at that. There's a key role of the private sector as an engine for innovation, but this also requires support, and the enabling environment is key. We can get stuck on things like digital identity and voila, problem not solved. So the cohesion here needs to be done. Better appreciation of customer needs. We keep saying, know your diaspora. I would like to add, as of this day, 3 little dots and says, and their families, because this is what it's all about. You need to know their needs as well, the needs of the remittance recipients, the type of services that you can link that. There's business bound there, and there's social impact, and this is, I think, key. I think the spearheading of financial and digital inclusion through the remittances is not to be doubted anymore. And I think this is what we see, particularly from having our colleagues from the private sector enthusiastically telling us not only where they are because of this opportunity, but where they see ahead. And I think this is very promising, and for institutions and public sector and governments alike, this is very promising. Colleagues, if you're missing any of the questions, we will try to see with the organizers if there's a way of answering to those. We will put them in the gfrid.org. So I want to thank everyone for participating today, for their time. And I want to thank again our colleagues on screen for taking the time for this event. Thank you so much for your time. Bye-bye.